An oil shock rattled Wall Street today, and the market split right down the middle. Welcome to Finance in Review. This is your U.S. market recap for July 13th, 2026. Nothing in this video is investment advice, just a factual look at what happened. Coming up, why a left-for-dead software stock jumped 12%, and why the average stock barely moved while the giants sank. The S&P 500 fell after crude oil surged on a fresh supply disruption in the Middle East. It closed at 7,515, down about 0.8%. But look closer. The equal weight S&P was basically flat, so the typical stock held its ground. Roughly 7 and 10 points of the drop came from a handful of mega-cap names. The Dow Jones Industrial Average held up best among the major benchmarks. It closed at 52,499, down about 0.25%. With less exposure to high-growth technology, the Dow leaned on its energy and financial names, and that limited the damage on an otherwise rough day for chip stocks. The tech-heavy Nasdaq Composite took the hardest hit. It closed at 25,873, down 1.5%. Semiconductor and memory chip stocks led the retreat as rising oil prices pushed Treasury yields higher, a combination that has historically weighed on richly valued growth shares. The Russell 2000 fell about 0.8% to close at 2,953, its second straight down day. Small caps roughly matched the S&P today. Beneath the surface, breadth leaned negative, with decliners outnumbering advancers by a modest margin across our market universe. The VIX, Wall Street's gauge of expected volatility, jumped more than 14% to close at 17.2. It measures how much movement traders expect in the S&P over the coming month. A reading near 17 is still fairly moderate by recent standards, but today's sharp jump shows expectations for market swings climbed notably. Sector performance split cleanly along the day's theme. Energy was the runaway leader, climbing about 3% as crude oil surged more than 9%. That jump followed reports of a supply disruption in the Strait of Hormuz, a critical shipping lane for global oil. Defensive and value corners also held up. Utilities rose about 0.7%. Financials gained roughly the same, and both consumer staples and real estate added just over 0.5%. The other side of the ledger was all about growth. Technology was the worst performer by far, dropping about 2.5% as chip stocks tumbled. Consumer discretionary fell about 1%, and industrials slipped about 0.8. Communication services finished essentially flat. It was a classic rotation day, with money moving out of high-growth technology and into energy and defensive names. Now to the day's biggest movers, away from the megacaps. Figma, the design software company, led the gainers with a jump of about 12%. The move came during a short squeeze, as a large institution disclosed a new stake in a stock that bearish traders had been heavily shorting. Energy names rode the oil surge. Northern Oil and Gas, an oil and gas producer, climbed nearly 10%, and Venture Global, a liquefied natural gas exporter, added about 9%. On the losing side, the pain was concentrated in technology. AppLovin, a mobile advertising company, slid nearly 13% after an analyst note raised questions about its e-commerce ads rollout. Astera Labs, a semiconductor company, fell about 12%, caught in the broad chip sell-off with no major company-specific news. And Regencell Bioscience, a specialty drug maker, dropped about 14% as a change in its auditor put the company's governance and cash position in focus. Turning to the most actively traded stocks by volume, American Airlines was the busiest, with about 153 million shares changing hands. It fell nearly 4%, following a Wall Street downgrade. New Holdings, the Latin American digital bank, traded about 133 million shares and finished roughly flat. SK Hynix and Ondas each drew heavy volume as well. Nvidia also made the list, trading around 113 million shares and falling about 3.5%, part of the same chip sell-off that pressured the Nasdaq. Time for today's Market Minute. You may not realize there are really two versions of the S&P 500. The regular index weights companies by size, so a small group of giants carries most of the influence. The equal weight version gives all 500 companies the same say, about 1/5 of 1% each. When the two move apart, it tells you something. Today is a perfect example. The regular index fell about 0.8%, dragged down by a few large technology names. But the equal weight version was nearly flat. That gap means the average stock actually held up well, even as the biggest names did the heavy lifting on the downside. To recap, Stocks fell as an oil supply shock lifted crude more than 9%, sending energy higher, while technology and chip stocks tumbled. The major indexes each lost between 0.25% and 1.5%. Yet the average stock barely moved, a reminder that the headline number rarely tells the whole story. That's the market close for today. Thanks for watching. And remember, this is information, not investment advice.